But I think we're ready to get started. Welcome everyone. Thank you so much for joining us for this really important discussion on the report that was just released. We're really excited to have Dr. Julia Chears-Young here to speak about the barriers to capital access in the report that was just released recently. That was done by the Winthrop Rockefeller Foundation and Winrock International. So just a little bit about the Rocket Lab, what we are. We are a startup hub, an entrepreneurial startup hub developed to give access to the very things we're going to be talking about today, but access to tools, resources, to training, mentorship, to consultations for under-resourced entrepreneurs who don't typically have this access or have a very difficult time finding these resources. And one of the resources that is really important to us is access to capital. And so that's why we thought it was really important to have this discussion today. Before we get into the discussion and before I turn over the floor to Dr. Chears-Young, I do want to remind you of the events that we have coming up for the Rocket Lab. We've got tons of things planned, many ways for you to get involved, and some of those things I'll tell you about in future sessions, but I want to definitely let you know what sessions we have coming up. On April 6th, we have our first in the Beyond the Idea series. We have Ms. Garbo Hearn. She's coming, Mrs. Garbo Hearn. She's going to come and speak about the barriers that she's had to growing her business. She's going to give her business advice. The Beyond the Ideas series is all about seasoned entrepreneurs telling their story, helping us understand their journey through their failures to their success. And so it's a really great series. It's going to be April 6th, another 12 o'clock Zoom event. We also have another event coming up on April 16th. It's going to be about how to create an operating agreement for your business. And this is going to be done by the Bowen Law School, another very important piece of growing your business and starting your business, really. So if you have any interest in these, definitely go to the CALS website, cals.org/rocket lab, rock-it-lab. But if you just search that online, you'll find us. And I'll also put those links in the discussion. I want to remind you that this will be an interactive discussion. We're going to have Dr. Julia give her presentation, Dr. Chears-Young give her presentation. But at the end of it, we want to open the floor for questions. So if you have questions, please be sure to put those in the chat, and at any point, put them in the chat, and we'll definitely make sure that we answer all those questions before or at the end of the presentation, and have Dr. Chears-Young answer those questions. And I think that is all that I wanted to say. I want to make sure that Benito doesn't have anything that he wants to say. So I'm going to turn over the floor and see if there's anything that he wants to add to before we get started.
I think we are fine. Let's listen to Julia. Thank you.
Awesome, great. Well, I'm just going to hand over the floor. She is the principal researcher on this report, and so she has some really fascinating things to share with us. And I'm just really I feel honored that she made the time to come and speak with us about this. So Dr. Chears-Young, the floor is yours.
Awesome. Thank you, Leah, and thank you, Benito. I appreciate you both inviting me to come and speak for the Rocket Lab this afternoon. And so it's a pleasure to be here. And then, of course, I always want to thank the Rockefeller Foundation and the Winrock International for financing a study like this and being interested in a study like this, and feeling that knowing that it's important for our state and our communities here in Arkansas. So to talk a little bit about the work that I did for them, we did a study, and the study was actually conducted in 2019. And so the purpose of the study was to explore the barriers that cause disparities in access and full participation in lending and business capital programs, as well as to ascertain the degree in which local financial institutions support the advancement of minority-owned businesses and their access to capital. So those were two of the main research questions that were covered in this study. And so the study was done statewide. We did the study in actually 4 phases altogether. We did a survey, and we had over 200 entrepreneurs participate in the survey. Then we narrowed it down and did focus groups. We did 5 focus groups across the state. We also took invited people from the focus group to participate in case studies. And so we looked closely at 5 different entrepreneurs here in the state of Arkansas and kind of went deeper into their stories. And then we also looked at secondary data. And what I mean by secondary data, so the data that was collected in the study was organic. Primary, it would be considered primary data. But then we also looked at secondary data, which is data that's already been collected by someone else. And so in this case, we looked at the data from the Small Business Administration and some of the loan dollars that have been given out in the state of Arkansas over the last 5 years. And so I'm going to share my screen and just share a little bit of the findings. I won't share all the findings. The report is published on the Winthrop Rockefeller website, Foundation website. So if you go to wrfoundation.org, you can find the full study there and read more into it. But so just to share some of the findings that came from the study. Well, one of the things that we found was a disparity in minorities versus white in what type of funds that they're using to start their businesses. And in this case, we found that more minorities, and when I say minorities, in this case, I'm talking about ethnicities. So I'm talking about Blacks, Hispanics, American Indians, people of color, entrepreneurs of color. They rely more on personal funds to start their businesses. They rely on things like credit cards, student loans, their savings account, retirements. A lot of people talk about exhausting their savings and retirements to be able to start their businesses, compared to white entrepreneurs who a lot of times don't have to rely as much on personal funds to be able to start their businesses. So one of the other things that we found in the study is the rate in which minorities versus white entrepreneurs are approved for loans. So entrepreneurs of color, they are approved at a less rate and denied at a higher rate when it comes to applying for loans. And this was we asked them over the last 3 years. Over the last 3 years, have you applied for a loan? And when we asked them had they applied for a loan, then we went into, were you approved? And also remember, people can apply for a loan more than one time. So people are applying for loans. Some of them apply for loans multiple times. So if you're looking for these numbers to add up to even 100s, that's why it's not going to add up to even 100, because they could have applied for multiple loans. They could have got approved and denied because they're applying for loans on multiple occasions. And so we asked them specific questions about each. Were you approved for loans? Were you denied? And so we found that a lot of them entrepreneurs of color, they reported being approved at a lower rate and denied at a higher rate. One of the other things that we found that stood out was when you actually look at the females versus male entrepreneurs as well. Here you have 46% of the females who participated in the study. They said that they applied for a loan, right? But only 71% of that 46%, 71% said they were approved, 60% said they were denied. Well, when you look at the number of the percentage or ratio of participants who said that male participants who said they applied for loans, their number is higher. So you have more males applying for loans, but yet when it comes to it, our female entrepreneurs are being approved and denied at the same rate. So it's less of them applying, but they're getting approved and denied at the same rate. Whereas there's more males applying and they're getting approved and approved or denied at the same rate as the females. And so there is a disparity, even though if you look at the numbers, you think like, well, there's really not, but yeah, it really is, because less female entrepreneurs are applying for loans through lending institutions. So percent of entrepreneurs who felt supported by a lending institution, when it comes to entrepreneurs of color, 50% of them said they don't feel supported by lending institutions, whereas 81% of white entrepreneurs said that they do. And so there's definitely a disparity on feeling even welcomed. And when we went even deeper, especially in the focus groups, and people really, and we dug deeper into people's feelings and experiences about applying for loan. A lot of them expressed not feeling welcome or not feeling accepted when they're walking into these lending institutions and asking for money. Here you'll see that on average, how, again, this relates to what we just showed you here, because they rated their experience from unsatisfactory, satisfactory, good, and outstanding. But really, overall, no one really gave the banks a 4 stars, right? But you do see that the entrepreneurs of color did rate their experiences lower than the white entrepreneurs. But overall, there's some improvement on both sides for everyone. Then when we looked at the secondary data, the SBA loan dollars that were given in the state of Arkansas over the past 5 years, when we looked at that data, here's what we found. So a disproportionate amount of the loan dollars were given out to white entrepreneurs versus entrepreneurs of color. And even when you looked at, for instance, the green dot, that shows the percentages of small businesses that are Black owned. And then you look at the amount of dollars that were given out to Black owned businesses is very disproportionate. So we're not even lending out the dollars at a proportionate rate of businesses, of the percentages of businesses. Does that make sense? And I guess everybody's on mute, so thumbs up. Okay.
Yes, it makes sense, Julia. Thank you.
And so that's definitely something to really think about and consider, because if you're lending out at the same proportionate rate of businesses that are out there, because there is going, if you have more, we have more white entrepreneur or white owned businesses than businesses of color, all right? So naturally, you're going to have more loan dollars probably given to entrepreneurs, white entrepreneurs versus entrepreneurs of color. However, at least you would expect it to be more proportionate as far as the lending, especially coming from SBA. So then we also went a little bit further last year when the shutdown happened. And so I had another conversation with Corey. Corey came to me, he said, you know, we really want to look at how this pandemic is affecting people of color when it comes to their businesses. Because we know a lot of businesses were affected, things were shut down, things that we never thought was shut down. And so we know nationally across the whole United States that minority businesses suffered the most, right? And so Corey, he came to me, he said, let's look and see real time what is happening, right? And so we did another, as you could say, continuation or an amendment to the first report. So we did another study last year that was a 3-part study where we looked at, we reached out to entrepreneurs and we said, hey, give us some feedback of what's happening to you in your business right now. And we did that over 3 months because we were capturing real time. So we did that for May, June, and July of last year. And so we asked them again, because we knew that the PPP dollars had went out, the EIDL loan dollars had went out, all these CARES Act dollars had went out, right? And so we asked them again, did you apply for loans? And so here they said, so we had 76% of people, entrepreneurs of color, said that they did apply for loans, whereas 96% of white entrepreneurs said they applied for loans. So again, we're still applying for loans at a disproportionate rate. And part of that goes back to people's feelings of how they're going to be treated by the lending institutions and relying more on their personal funds to be able to fund their businesses. When we also asked them, like, which category of banking institution, and again, I'm just highlighting some of the things that came out of this report. So we asked them, which category of banking institutions did you use to apply for funds? And so this was really interesting to me, because when it came to our regional banks, which are, our banks here in Arkansas, Arvest, Simmons, Regions, Bank of Ozarks, and we gave all of these banks as examples. So they had this in front of them when they were responding to the survey. Look at the number of entrepreneurs of color the percentage of entrepreneur of colors who actually went to some of our regional banks versus the percentage of white entrepreneurs who went to our regional banks for lending, for those PP dollars and those idle loans. And then look at the percentage of entrepreneurs of color who actually went outside of Arkansas and did more institutions such as Bank of America or US Bank or Wells Fargo, or even other banks that are like just online. A higher percentage of entrepreneurs of color went more to like national banks than the ones that then there were banks that's right here in Arkansas. So that's something to be considered and to be thinking about. If you're on here and you're from one of the lending institutions, one of the questions I would be asking is why? Why is that? Why did they not feel that they could come to banks right around the corner from their house or right around the corner from their business versus some of the national banks like Bank of America, US Bank, Wells Fargo's, and some other online banks? And I'm not calling Bank of America and US Bank and them online banks, but there are people applied for lending from online banks. Or I should say banks online, applied online. That's what I should say, applied online. Who assisted you? We also asked, because we kind of wanted to know what their experience was, right? Because we know that there were people out there that were assisting people with applying for those PPP and idle loan dollars. And so we asked, who assisted you, if anyone, with the application process? And so here again, look at that. A lot of the entrepreneurs of color said no one. So a lot of them just, we didn't dig deep to say what was your reason as to why no one assisted you. So we don't know the why. We don't know if they just didn't feel comfortable going to anyone, or if they just didn't know that they can go to anyone, or if they just didn't want to go to anyone. We didn't ask why. But just know that it is alarming that for a majority of the entrepreneurs of color, no one assisted them. When you look over here at the white entrepreneurs, you see that a majority of them had someone at the banking institution assisting them. So right there's another area of concern and things that we want to be able to work on and improve on. And so then on average, we said, how was your experience with each of the following aspects related to the loan process? And again, we got the same responses or similar responses to what we received the first time. So a whole year later, even though the loan dollars were, everybody was excited about, okay, we got this federal money that's been rolled out to help businesses, small businesses, their experiences still were rated similar. No one really on both sides, whether they were entrepreneurs of color, white entrepreneurs, it didn't matter. No one gave the banks a 4-star. But again, the white entrepreneurs did have a little bit better, it reported a little bit better experience than entrepreneurs of color. And then we also, keep in mind, this is self-reported dollars. So before, when we did the study in 2019, those dollars were actual reports that we received from the Small Business Administration. So whereas just keep in mind, this is self-reported dollars. So just so you know, getting the information about the actual loan dollars given out to by specific demographics for the PPP and the EIDL is not available. We tried, but as of right now, it's not available, not specifically. But we did, so they did report to us what dollars they received. And so out of all the people that responded, we took the total dollars that everybody said they received, and then we broke it out to say, okay, for the entrepreneurs of color, they received 27.5 million, 19% of the total dollars, versus white entrepreneurs, they received 118, 81% of the total dollars. But we do know that even though this was self-reported, it's still consistent to what we saw a whole year earlier when we were actually looking at the data that was received or shared with us from the actual SBA. Does that make sense? Any more thumbs up? And so that's that kind of concludes what we were some of the results that came from both studies that we did, the one in 2019 and the one in last year during the pandemic. And now I'm going to turn it back over to you, Leah.
Well, thank you. Thank you so much for that report and giving that information. We have a few questions here in the chat, and just reminding everyone that if you have other questions for Dr. Chears-Young, please do ask them. Thank you. Thank you. I see other questions coming up. So the first question that came in the chat came as a direct message, and it's a concern that I think a lot of business owners have. This particular business owner started her business all on her own, bootstrapped it, 401k, just created her own nest egg to create her business. And now she's looking to expand. And she said, and I'll read her quote here, her biggest hurdle is fear. I have this strange fear of chasing capital and owing someone something when I have been self-built this whole time. And then she also feels like she doesn't understand the process or how much control the institutions will have over her operations and plans. And so how can businesses navigate those types of fears and concerns?
So I think one of the things that has to happen is a stronger relationship between entrepreneurs and people that are starting businesses and those lending institutions. So I think the lending institutions have a responsibility to, one, get the message out there to all entrepreneurs, what's available to them and how to go about that process of attaining those loans, what that process looks like. One of the things that I've heard the person say is they were worried about the control that the lending institution would have on there. So there's a knowledge gap as well about these lending institutions and what that means for you to take out a loan with them. And so I think as they also have a responsibility too, to kind of put the messages out there for people, so people will feel welcome and so people not be afraid to even ask them the question. So ask them the question. Who can they go to is probably one of the issues as to why that fear is there. And what does this mean? What does this mean for me to have a $100,000 loan and I'm trying to repay it while I'm still trying to build my business?
Yeah, thank you. Yeah, I think that relationship building is super important, just to understand what that relationship looks like. I know I had a question. One of the things that I was wondering if you had any thoughts about was, what things, if anything, about the report results did you find surprising, if anything?
So I don't necessarily know that I was surprised about everything because I am an entrepreneur myself. And so some of the same things conversations that I had already had were previously before doing this study with other entrepreneurs. I kind of knew a little bit about how people felt in the community from where I come from, but it did surprise me. I was surprised by the number of entrepreneurs of color who actually did say that they use student loans and credit cards and other things like that to fund their startups. because it's easier. Here's was the reason why. They said it's easier to get approved for those types of loans or than a business loan. And so that was one thing that did surprise me, as well as the other thing that I was not that surprised about, but is the disparity though, when I saw the proportion, the actual dollar amount of money that came from SBA for 7A loans, and then looking at the number, the dollar amount that was actually given out to people of color, that was surprising.
I can imagine. We have another question from Jay Jackson. He asks, what can be done at the government level to help improve funding and resources for Black entrepreneurs?
It's just simple, one word: accountability. So accountability. Until the federal government puts some kind of accountability measures in place and track what's actually happening with those dollars, we're not going to see a lot of change. Yeah. So somebody has to put some accountability measures into place at the federal level.
I definitely agree. And that kind of goes into a question, another question that I had, which is, how do you feel that institutions, so the institutions that you spoke of, that you all did the study looking at, how can they best utilize this information that the report has illuminated? What do you think are some next steps that they can take?
So one of the things I think is first that the institutions have to accept the findings, right? And admit that there is a gap, admit that there is a disparity. So the institutions have to accept the findings and then want to change and improve on their practices. And so by no means is the report or any of us saying that everything the banks or the institutions are doing is wrong. We're not saying that at all. As entrepreneurs, we all have to do our part as well and to become lender ready. But however, the institutions could do more to reach out to the entrepreneurs of color and support more programs and initiatives in the communities of the people they serve. So they can use this report to start those conversations internally and identify possible leaks in standards in their internal standards and practices that they have control over. We do understand that there's some things they don't have control over because some things are regulated down from the federal government, but the things that they do have control over, they can start looking at where's the leaks in our practices, in our standards here in our institution.
I love that answer, obviously. And it kind of piggybacks into, you mentioned something at the beginning of that, which is, we have to be lending ready. We have to be ready to be lended to. And so that was my next question is, how do you feel individual business owners, aspiring business owners, with this information and in these demographics, how can they best prepare themselves to be lending ready, or and how can they best utilize this information?
So one of the things too, so to get themselves more lender ready, they got to go back to building that relationship, talking to people that's in those spaces. And there's a lot of resources around Arkansas. Even if you start off by just talking to somebody from a community, okay, I'm gonna get this wrong. So CDFI, Community Development Financial Institutions or something like that. CDFIs, just starting with that, Forge, Communities Unlimited, and I think there's one more, or even smaller institutions like Hope Federal Credit Union. But start somewhere with talking to people that's in that space to know what's expected and required and how to help you get there. Now, given we do know that people of color are coming already from a disadvantage a lot of times because we don't have a pedigree uncle that can just loan us $10,000, right? And so some of us are already starting businesses and we're already in debt. We're in debt from student loan debt or credit card debt or medical bill, already at a disadvantage with where we are with our credit and our debt in our history. But even with that, to overcome some of those things, you have to start having those conversations and being involved in getting, building relationships with people that are in that space. Speak up and be more involved in conversations in your community and with people that are trying to do something to improve the community and help entrepreneurs. That's pretty much my suggestion.
Well, I mean, I think that makes a lot of sense. It's getting yourself involved in the conversations, because a lot of times fear, what I've found for myself as an entrepreneur, I'm an entrepreneur also, is that fear is oftentimes the biggest barrier, because once you have those conversations, then you realize how much easier it is to do the thing that you're hoping to get done. And my next question kind of goes into that a little bit. If there were any other factors in these communities that you all were studying that might have contributed to the disparities observed. So beyond what you said, that fear of getting into the conversations, did you observe anything else?
Yes. So when we did this study, especially when we did the focus groups, we learned a lot about more deeper about people's experiences and feelings when it comes to even just entering those lending institutions. And so one of the things that came up out of the study is that lack of presence of loan officers who are from the community and match the demographic of the community for the people who they serve. So people not being able to walk into these institutions and see someone that represents them, that looks like them, that can relate to them. So the obvious solution to that is to recruit more diversity in these establishments. Entrepreneurs of color avoid dealing with some of these institutions because out of fear of being denied, as well as not feeling welcome. So not having that presence of someone you can relate to when you walk into those institutions, that's one of the things that causes one of those fears. And when it comes to applying for loans, even though they may have an account there, they may be frequenting that institution and have an account there, but then when it comes to loans, they don't feel that there's someone there that they can relate to and talk to about what they're trying to do as well. One of the other things that came out in the report is different types of businesses aren't, how I want to say this. Some businesses aren't recognized as businesses. Therefore, they don't qualify for loans. And then all businesses are being treated the same. And so anyone that's an entrepreneur, all businesses aren't the same. You do, for instance, a business that does a consulting business, for instance, they may not turn over revenue as quick as you selling a product, selling a consumable good. And so that was one of the other things that came out in the report, is that the practices of the lending institutions is almost like a one-size-fits-all loan for every industry, when how you turn over profit in different industries, it differs. So I would say definitely more training and practices that eliminate cultural biases and welcome diversity would be in order.
Wow, you just illuminated things I didn't even know. That's why I'm so happy that we have these conversations. Someone asked, what are the advantages of the local lenders over the national institutions?
I would say the advantage of a local lender is because you can walk in there and talk to somebody anytime. And so, because things happen, we know things happen in business, right? One day you up, the next day, boom, you're down. If you're dealing with a national lender, you're talking to somebody you really don't have a relationship with them. Versus if you're dealing with a local lender, hey, I may not be able to get you on the phone, but I could walk in there and talk to you. And they get to know you, they know your community, they know what you're trying to do in the community. And so it's a win-win relationship when it comes to serving your community. The national lenders, they don't know anything about your community. They probably could care less of what's going on in Arkansas in your community, versus the local ones, you would think, or you hope that they care about what happens in Arkansas, and you're keeping money here.
Oh, I really love that answer. And I think, again, people just don't realize that you can develop these very strong relationships where, like you said, people know what your business is about and what you're doing, and they're in the same community that you're in. So that's a powerful answer. And someone else asked, is there any info on how big of a factor credit was in the denial of capital for capital?
I would just say, from the lending side, no, and that is one of the things that. So this report was the voice of entrepreneurs, strictly the voice of entrepreneurs, and so the study was just all about the entrepreneurs. Now, is there more work that needs to be done? Absolutely. We would love to hear the voice of the lending institutions, because I'm sure they have things, a different perspective on some of it, and then come together and see now where really are the gaps. So as far as from actual numbers from the lending institutions, no, we don't know how big of a factor credit was. But I will tell you that from the ones that participated in the study, a lot of women entrepreneurs reported that they couldn't get loans because of credit, or they were afraid to even apply for the loan because of their credit. So that definitely was a factor when it came to women.
Thank you for that answer. And now I want to kind of move our questions just for a second into other funding resources or other funding sources. So we had a question in the chat. And by the way, everyone, if you haven't checked out the conversation happening in the chat, there have been some really great comments. So be sure to check those out. And definitely, if you have any other questions, please put them in the chat. But one question was, what other funding sources besides lending institutions can Black business owners access to get their enterprises started?
Well, I'll give you my experience. So I went through a program, again, it's through the Windrock International. The program is called Delta I Fund. And so I have a wrist brace that's coming to market. I actually have all my units, about to put them out there for sale. Thank you. But I received $50,000 by going through this program. And actually probably 55 altogether, $55,000 by going through this program. So this program was very instrumental and helpful in me being able to get my innovation from my head to an actual product. And now I'm being able to roll it out. So there are resources out there. So again, we lack the knowledge sometimes of all the resources that are out there available to us, as well as on their end, sometimes they're not doing a good job, or they could do a better job as to getting the information out there in our communities. And so I know the Delta I Fund is one. I think there's some more dealing with the conductor out of Conway, and then up in Fayetteville, there's a couple of programs. I think it's called Innovate Arkansas. And then downtown off of Main Street. Forgive me, I can't think of the names of all of these programs, but there's programs out there. So talk to people like Benito Lupazebo, Remix Ideas. He's good at pointing people. In fact, he was the one that introduced me to the Delta I Fund. He told me about it. So again, building relationships and networking with people in your community, other entrepreneurs people in the space, you'll find out information. You'll find out other resources that are available to you around Arkansas.
Yeah, I think that the takeaway there is that there are many programs that are available, and it's about connecting with your community and having those conversations to find out what those programs are. And now this might actually be the same question, but there's a nuance there, so I just want to ask it in case. Are there programs that prepare entrepreneurs of color for the loan process? So not necessarily the loan process with like a specific fund, but just the loan process of actually maybe going to a traditional lender?
Yes, there are. The ASBTDC, which stands for Arkansas Small Business and Technology Development Center. Long name, but if you just look up ASBTDC, they're located on some of the campuses of the University of Arkansas. They help people prepare them to be lender ready. They actually help you with a lot of stuff from the start to finish with your business idea, but they get you ready for the lenders. And I've seen them refer a lot of people to even like Communities Unlimited, some of the CDFIs. Now, they may refer people to other institutions. I'm not sure. I just know that I've seen them refer a lot of people to Communities Unlimited and Forge Inc. And when they refer them, they're already ready. Like they know when these people come from ASB TDC, they've already gone through a strenuous process and they've developed what's called a lean canvas. And if you don't know what that is, you need to look that up. If they've already gone through the lean canvas process. And so that helps them be a little better prepared and ready for lending.
Thank you. And everyone, again, I just want to remind you that in the chat, a lot of these resources are being listed. So Mr. Chears-Young just listed that it's ASB TDC, Forge, Communities Unlimited, Remix Business Academy, The Conductor, Go Forward, Pine Bluff, the Venture Center. So again, the chat has a ton of really excellent information and resources. So be sure you check the chat. And be sure to list any other questions, because we have Dr. Chears-Young here for another 15 minutes. So we want to make sure that we get all our questions answered. I know I have one more question, and I kind of alluded to this in the beginning, but I just want to particularly focus on the community organizations also. But what do you feel are the next steps for the lending institutions, but also for the community organizations that particularly assist people of color and women-owned businesses, now that they have this report in hand, now that they have this actual tangible data in hand? What are the next steps?
So what I think is the next step is, again, like I had mentioned earlier, this study was the voice of the entrepreneurs. And so one of the next steps would be to ascertain more data and information that comes from the perspective of the lending institutions and looking at some of their practices and why and how those practices benefit or cause barriers. And then being able to put the two together and say, okay, now let's truly see where the gaps lie. Because we don't have the big picture. Right now, we just have a portion of the picture. We only have one side of the picture. We don't have the other side of the picture. And so I think that's one of the next steps that have to take place. But I know conversations, Corey Anderson and Dr. Sharice, they've already begun raising the recognition or awareness and starting those conversations with some of the lending institutions on what can be done differently to help serve our entrepreneurs, our small business owners, and our community. So that's also a good first step too. And then those institutions looking again at their own practices internally to say, okay, where can we improve on our practices? Have we had this policy in place since 1950? We're in 2021. Maybe this practice, do we need to still have this practice in place the way, are we still doing things that are archaic to where we are in our times with right now, being in the 21st century? So even them taking a look at their policies and practices and saying, okay, what can we do to work with the communities of Arkansas to help our small business owners and entrepreneurs?
Great, thank you. And I see we have Mr. Corey Anderson that is actually here. I know his camera is off, but I did want to acknowledge that he is here and thank him for attending and see if he wanted to add anything to the discussion. No pressure, but if you'd like to.
Only to say that Dr. J has hit the nail on the head, and we appreciate her work doing the research and Benito's vision to put it together. But no, she's hit the nail on the head. Thank you.
Excellent, and thank you very much. Do we have any other questions from the audience? And I also wanted to hand over the floor to Benito and see if he had anything he wanted to add, because we're kind of reaching the end of our presentation. Okay, everyone. Again, remember, you've got Dr. Chears-Young here, principal researcher, And this is a great opportunity to ask any questions. And remember, there are no questions that are bad questions, only the ones you don't ask.
Leah, maybe I can ask maybe one of our partners, Forge, which I think they are CDFI, Community Development Financial Institution. They have been very supportive in terms of really democratize access to capital here in Arkansas. So I'm gonna ask, I know there are two, Philip is here, Jay is here. So I'm gonna ask Philip if you can share a little bit about Forge and let people know what can they, you guys, what are you doing and how can they get access to capital?
Sure. Hi, thank you. And Dr. Chears-Young, thank you for all your work and leading this discussion. So Forge has been around since 1988 and was founded specifically to provide access to capital to those who lack that access from traditional finance. When it was founded, that was about organic farming in the Ozarks bioregion in Northwest Arkansas. That's since expanded to that group who lacks access for Forge, and our definition has grown tremendously. And we do mostly microloans, around $50,000 or less. We've got the ability to do more than that, up to $200,000. We just don't usually have the money to do it, honestly. And we've expanded across the state. We do a little work in Southwest Missouri, in Northern Louisiana, and Eastern Oklahoma. And we've been kind of growing over the last couple of years and are poised to do a little bit more. And to Dr. Chears-Young's point, as we've looked at hiring and expansion, we're specifically looking to hire from those communities where we want to expand that access, and looking to recruit community members that are appropriate for that community and its citizenry. So.
Thank you very much. And I want to, again, to thank Corey Anderson and WRF. They have been very supportive in terms of make sure that we build a more equitable and just entrepreneur ecosystem. So thank you, Corey Anderson and WRF, for this kind of vision to make sure that we do this kind of studies and understand these barriers, and also not understand the barriers, but we need to dismantle these barriers. Julia, maybe one question, how can we dismantle these barriers?
Well, certainly these barriers won't be dismantled overnight, right? But I think it just takes coming together as a community, no matter which side of you're on, whether you're on the lending institution side or you're the business owner, entrepreneur, but both coming together. And again, just looking at what's happening, where are the gaps? What can we do to help improve on our community there? How do we get resources out there? How do we let them know? How do we market ourselves differently so that people will see the institutions as their friends instead of, I won't say enemy, that sounds kind of harsh, but they'll see them as a friend, as some place they can go to. So as well as with all the other resources that are available, Jay named a lot of the resources in the chat. A lot of those I know about, and actually I've been involved in quite a bit of those resources he named, but I had to find them all on my own. Like I got in touch with somebody and then they put me in touch with that person. Then that person put me in touch with the next person. Then the next person put me in touch with someone. So being able for all of these organizations, not just the lending institutions, but all of these resources and organizations across Arkansas, doing a better job of marketing yourselves to the communities that need you the most, and making sure the word is out there for these business owners and entrepreneurs, providing that support to them to help them get to a point to where they can walk into a bank and feel confident about asking for $100,000 and knowing that they have all their things are checked off in a row and they'll be able to get it. knowing that they have a viable business that they're starting, a business that's scalable, that's going to be profitable and scalable, and then being able to go from there. Every idea isn't a business. We got to realize that too. Every idea isn't a business. So actually knowing the difference too between building a business versus providing a hobby. And those are just some of my ideas and thoughts. And this is just me. This is my opinion. Other people might feel differently, might have a different opinion about it.
But I really, really appreciate you sharing, Dr. Chears-Young. It's just been, I mean, we're getting to the end of our hour together. And I just want to say thank you. There were so many gems in this conversation. I have to say that the report spoke for me also as an entrepreneur. There were so many things in the report and in your presentation today that I related to in the beginnings of my journey, and the same fears and questions that I've had. And I'm sure that's across the board. I'm sure that that is a common, many people can say that. And so I just appreciate that you took the time, and the Winthrop Rockefeller Foundation and Winrock International felt the importance of this conversation and of having this report. And I feel like it's a beautiful starting point. Everyone, I want to remind you that in the chat, there are some amazing resources. So if you want to grab any of those resources, be sure that you go through and copy that information. And I want to remind everyone, first, I want to say thank you again, Dr. Julia Chears-Young. Thank you so much for this presentation. Thank you for spending this time with us. I'm sure everyone has been inspired and revved up and ready to go to make real changes in our entrepreneurial ecosystem, our economic ecosystem here in Central Arkansas. What I wanted to do was to remind everyone about all of the events that we have coming up, particularly in April. So be sure that you do not miss our April 6th event with Mrs. Garbo Hearn. So if you came in a little bit later in the presentation today, you missed me talking about it earlier on, but she's going to be the first presenter in our Beyond the Ideas conversation. That's going to happen on April 6th from 12 to 1, another Zoom presentation. And so she's going to be speaking about just telling her story as an entrepreneur and really inspiring us and what it takes to really be in the long game of being a business owner. And then on April 15th, we have our operating agreements workshop. That's going to be another Zoom meeting. And in that meeting, the Bowen Law School is going to come and talk about the importance of an operating agreements workshop, or the importance of an operating agreement, and why it's necessary in your business. So these are all free resources. You can sign up for them. You can go to the CALS Facebook page. They're all up on the CALS Facebook page. They're also in the beginning parts of the chat. And I think that's all I have for you all today. I'm just really, really grateful and thankful for your presence here. Thank you again, Dr. Julia Chears-Young, for giving us this information and taking your time. Thank you for everyone who took the time to speak with us. Thank you for all the questions. And I think I'm ready to say have a great rest of your Thursday, and we'll see you at the next presentation.